Let's talk money.
Hello and welcome to Let's Talk Money, your weekly personal finance conversation with me, Surabhi Upadhyay. Now, this is a critical week because we are preparing for the all-important union budget, and it's the full-fledged version that we're going to get next week. So the expectations are high, as always. The common man is hoping that there will be some tax relief for him or her or for them. And then, of course, there are questions around capital gains, questions around housing. Can the government ease the burden for the great Indian middle class? Well, to help us get prepared, revise all our tax rates and to set those expectations right, I have with me on the show today Homi Mistry, partner at Deloitte India, as well as tax expert and tax consultant and CA, Suresh Surana. Gentlemen, thank you so much for being with me in the studio. It's an important time of the year once again. This year we're having it twice, right? We had a mini budget in February and now this is the full-blown one. And I guess so all hopes, all eyes looking towards the finance minister. But first, let me ask both of you, are you expecting anything big bang, so to speak? Homi?
Surabhi, thank you. We are expecting something maybe on the exemption limits. Currently, under the old regime, it's 2.5 lakh rupees, up to which you don't pay tax. And under the new tax regime, it's up to 3 lakh rupees. So there is an expectation that these exemption limits should move up, both under the old regime as well as under the new regime. So from 2.5 lakhs or 3 lakhs, it should at least go up to about 5 lakh rupees.
Oh.
So if that does happen, then correspondingly, the other slabs also then should go up. For example, under the new regime, you have a slab starting from 3 to 6 lakhs, where you pay 5% tax.
Yeah.
So if the slab does go up, the exemption limit does go up from 3 lakhs to 5 lakhs, then that first slab then maybe, like, let's say from 5 lakhs to 8 lakh rupees, whereby you'd pay a lower rate of tax.
I was just going to ask you, will that really make a difference? Because of the rebate, I mean, there's no tax up to 5 lakhs in the old regime and no tax up to, I think, 7 lakhs in the new regime.
Yes.
But you answered it, that increasing the basic rate means that everybody above also gets some relief.
They should
right?
get relief, yes.
Okay. Suresh, your key expectation on income tax per se?
No, I think this is an opportune time for making some very structural, far-reaching changes. The reason being, if you look at our tax collection last year, so financial year 23-24, personal tax collection has gone up by almost 25%, and it is at 12 lakh crores. Similarly, corporate tax also collection has gone up by almost 13%, although it is slightly below the personal tax. Also, we have the continuity of the finance minister. We also have a stable government. So I think definitely the expectation, India is right now the fastest growing large economy in the world. So really the expectations are very, very high. And I think it is an opportune time. Also, we have the fiscal legroom, so to say. Sometimes, we always have constraint, but this time there is a legroom available. So I think few structural changes definitely can be expected. See, corporate tax side, government did some major reforms. Like they brought down the tax rate to 25.17%. But personal tax, I think apart from basic exemption, which mentioned by Homi, maybe it can go to 3.5 lakhs at least under both the regimes. But the highest, if you look at the maximum marginal rate, we have under the old regular regime, a rate of 42.74%. And new regime also it is 39%. Now that is very steep. So what I feel that if we can cap it at 35.88%, and also there is a case for convergence of the two regimes now. Because 2 years back when the default regime started, the objective is that gradually more and more people will migrate to the default regime.
Right.
So even on corporate tax side, if you see now more than 90% companies are now going for the new regime.
Right.
So same way, I think personal tax also, there is too much complexity. If you look at the number of slabs, you have 7 slabs here in the old regime. You have 8 slabs in the new regime. You have different exemption limit, different maximum marginal rate. And then you cannot claim certain deductions under the new regime.
In the new regime. No,
so if you really make it simple, make it 3.5 lakh basic exemption, cap highest rate at 35.88%, and give deduction only limited, like ATC for savings, and maybe the interest on house property.
That's an interesting point. Some may say maybe a little radical. I don't know if the government can go the distance. But Homi, what do you think? I think the government's stated intent has been to get more and more people to migrate to the new regime.
Yes.
They talk about doing away with deduction, having lower, more predictable tax rates. But to what extent is it working when it comes to personal income tax? And what further tweaks would you advocate?
Yeah, so I think now more and more people are migrating to the new regime. In fact, in this year's tax return that one is filing for financial year 23-24, it says that if the new regime is the default regime, and only if you want to switch over to the old regime, you've got to take a box.
Yeah.
So obviously the government is now more focused on the new regime. They're giving some benefits still also under the new regime. For example, they brought in standard deduction under the new regime, which is 50,000 rupees for salaried employees. And there is an expectation that this should further go up maybe from 50,000 to at least 1 lakh rupees. The other benefit that one is getting also under the new regime is that where contributions are made by the employer towards this national pension scheme, a deduction can be claimed. It's currently 14% if you're a central or a state government employee, and for private sector it is 10%.
Right.
So the government could look at rationalizing and having a uniform rate even for the private sector, so whereby contributions up to 14% to this NPS should also be exempt from tax.
Okay, well, those are some thoughts that the government could work with. Since you brought up standard deduction, I just want to bring in a viewer question here, because I think this query does relate to standard deduction. It's coming in from Arjun, who's a viewer, and he's joining us right here from Mumbai. Arjun, welcome to Let's Talk Money. Tell us, what's your question?
What are your thoughts on the need to increase standard deduction limit in the current tax regime, given the concerns about their adequacy amidst rising inflation?
Okay, Arjun, great point. We always need more deductions. I don't know if the government will oblige or not. But Homi, you're mentioning standard deduction right now. Is there a case for it to be increased? Because somewhere there's a disconnect, right? When we say the government, the finance minister always talks about lowering and doing away with deductions, and yet there is an ask to increase standard deductions.
Yes.
So how does it tie in?
Yeah. So I would think that this request is more, it's not only from the very high income earners, salaried class, but even from the middle income earners, even they will benefit. That, and the expectation is, yes, it should go up from at least 50,000 to 1 lakh rupees.
Okay, so maybe a doubling of the limit. And right
Yes.
now, both the regimes give you the standard deduction, the old and the new. So let's see if there's any increase that comes in. So fair enough, we'll watch out for this increase in the basic income tax exemption threshold, increase in standard deduction. These are some of the starting points. But the big elephant in the room for many years has been capital gains tax, right? The fact that depending on the asset class, depending on the investment vehicle or the instrument of your choice, the rates, the holding periods, all of that can really vary. So, Mr. Surana, what is your view on this and what should be done?
Yeah, so I mean, you are absolutely right that at present we have a very complex capital gains regime. So you have different rates, 10%, 20%, 30% for long-term capital gain. Also, you have different periods of holding, like 12 months for listed shares and for the, in case of listed equity mutual funds, you have 24 months for the real estate and also for unlisted shares. And then you have a period of 3 years for other assets. So I think the 3-year period, today now everybody has become impatient. So 3 years is too long term. So I think 2 years is a probably reasonable period. We can do away with the 3-year, in terms of the asset class for long term. Anything held for more than 2 years.
And remind us once again, which are the asset classes where long term is defined as 3 years?
So anything other than equity or the listed, in terms of mutual funds, or anything real estate or shares of unlisted companies. Other than that, everything will go under
is 3 years.
So for example, any investment in gold, any investment in, debentures, which are, unlisted, or any other, I would say, asset, which are basically held by the, and also we have on top of it another, which is, we have section 50AA, which brings, in case your equity investment is less than 35%, then everything is subject to, it is not treated as a long-term gain at all. In case of those funds where the equity investment is less than 35%.
So it's a pretty
really it's a very
complicated-
complex kind of structure which is there.
No, absolutely, and that also brings in the question of mutual funds, because I think the landscape really changed. If you're in an equity mutual fund where more than 65% of holding is equity, then it's clean and simple. You get equity taxation, which remains 10% above 1 year. But anything beyond that, it's very, very convoluted, because debt funds were sort of really given a body blow when the benefit of indexation was taken away, that 36 month period. So Homi, just explain to us what is the current regime. He mentioned specified mutual fund.
Right.
So what does the law say right now, and would you expect any changes?
Yeah, so this was just brought in last year for these specified mutual funds. Basically, it's defined as a mutual fund whereby not more than 35% of the proceeds of the fund are invested in equity shares.
Okay.
So to that extent, you don't get any tax benefit, and whatever gain that you make when you dispose of these units of this specified mutual fund will be taxed at the normal rate of tax.
Okay.
The government also...
If the equity holding is less than 35%.
35% or less, yeah.
Okay.
Similar to that is the government also at the same time had brought in a change for what's called market-linked debentures. There are specified debentures which may be notified by SEBI. And what the government had said when they brought in the memorandum, they wanted to tax them at the normal rate of tax. Again, there's no indexation benefit, etc., because they felt that these MLDs, as they're called, are derivatives in nature, and derivatives are taxed at the normal rate.
Right.
So they felt that why should we give concession
favorable
rate
equity
of,
sort of taxation to
because
such
their returns
instruments.
are linked to returns on other type of securities.
Right. So, in the midst of all of this, I think the hybrid funds is a category which is not pure equity, which is not pure debt. I mean, they really have been pushed forward by the industry as well, and even investors are looking at them. They could be multi-asset funds. So, from a mutual fund industry perspective, what sort of a capital gains regime do you think would be fair, easy to understand, and easy to sort of comply with?
Yeah. So, this equity-oriented funds, where more than 65% of the funds are invested in equity, that I think is straightforward. The rate of tax is 10%.
Yeah.
So that's, and you get this exemption also up to 1 lakh rupees of the gains.
Right.
And the government has said that specified mutual funds, they will have to pay tax at the normal rate of tax. So the other option could be to look at other funds, whereby instead of having a 1-year period, you could have maybe a 2-year period, which are neither specified mutual funds nor equity-oriented funds. You know, let's say the funds invest more than 35%, but less than 65%. Maybe in such cases where they're not, if the funds again are listed, then maybe you'll have a concession rate of tax, because the government says listed securities basically are securities which are held for more than 1 year.
Right.
And there you generally get a concession rate of tax. You could even index the cost, you know.
That's another issue. What gets indexation benefit, what doesn't? So it remains fairly complicated. Okay, so we've discussed some of the, hopeful changes that maybe we can look out for when it comes to capital gains. Take a break. We'll come back on the other side and discuss housing. Can the common man expect any tax relief when it comes to housing? Back with that in just a bit.
Let's talk money